Mining Scout auf der Diggers und Dealers und wieder freue ich mich über einen interessanten Gesprächspartner. Diesmal ist es John Welburn von Resolute Mining. Thanks for joining for the interview.
Thanks very much. Nice to be on board.
Could you please give us a short introduction and you as a person and about your company?
Sure. As you said, I'm John Welburn. I'm the Managing Director and CEO of Resolute Mining Limited. I've recently joined the company. We've had almost a 30-year operating experience as explorers, developers and miners of gold projects both in Australia and particularly in Southwest Africa. My background, I'm originally an accountant and have been involved as an investment banker and as a director in mining companies for the last 15 years, and absolutely delighted to be in charge of Resolute, a very well-credentialed mining company with a lot of opportunities for growth.
What would you say are the main differences of gold mining in Australia and in Africa?
Well, I think the similarities are that there's a very endowed region. So here we are in Kalgoorlie at the Diggers and Dealers Conference, and all around us there are gold mines going back more than 100 years. In Africa there's a similar endowment of gold mineralisation in the ground. The difference is it's much less explored and much more opportunities for development. So the challenges of operating in Africa are obviously those of an emerging economy, a different risk rating, and you need a very specific skill set to deal with some of those challenges. But there's also an opportunity to be part of the emerging economic story of Africa, a continent that is waking up, and mining, infrastructure development and the economic empowerment of the local communities that mining development brings is also a very rewarding part of what we do in Africa.
So what are your growing strategies through the next years or months?
Well, Resolute has produced around 300,000 ounces of gold a year, roughly give or take, going back for more than 25 years. We've got a strong commitment to grow our production, but also to do it in a way that returns value to our shareholders. So we have an operating mine in Mali. It produces around 250,000 ounces of gold a year. And we have an operating mine in Queensland in Australia, which produces around 100,000 ounces. We want to grow those productions, and we want to make them more efficient so that we increase our cash margin. And then we've got a range of organic opportunities. We have a development project in Ghana, the Bibiani Gold Project. It's already produced 4 million ounces of gold. We'd like to get that into development and make it a profitable mine. And then we've got vast tracts of unexplored tenure in Côte d'Ivoire, in Tanzania, and around our existing operations in Mali, Ghana and Queensland. So we've got a lot on our plate, and it's an interesting gold story, and one we'd really like to have an international audience and particularly an international investor base to reward.
So are you going to look at takeover opportunities as well?
Look, our initial focus is around our organic growth opportunities. We think there's a lot of uncaptured value within Resolute. Our market capitalisation at the moment is only $150 million. And considering we've produced 7 million ounces of gold over the last 25 years, we're aiming to produce between 300 and 350,000 ounces this financial year. In the last quarter, we generated gross cash flow of $75 million. So, we and I think there's an opportunity to revalue the company on what we've already got. We want to expand our operations, develop our existing operations, but we will look for other opportunities as well. Gold is about growth. We have an amazing skill set in running multi-jurisdictional, multi-faceted gold mines, very skillful team, and we'd like to leverage that and use it in new opportunities. So our primary focus is what we've already got. We've got some great assets, but we will look to add new assets and leverage our capability.
So gold price is quite under pressure in US dollar terms, so the Australian market kind of is special with that regard because you have a stable gold price there. What's it like with Africa in your general situation?
Well, it's interesting. It's great. A third of our production comes from Australia, so with gold in Australian dollars currently at $1,500 an ounce, it provides a very healthy margin. In Africa and in Mali in particular, where we're producing, our costs are really tied to the euro. So even though we sell a lot of our gold in US dollars, our costs are denominated in euros, which is something the German investor market might understand. And it does allow us a lot of optionality as to how we sell our gold and how we maximise our revenue line. But the key thing in the gold space at the moment as a producer is to focus on your costs and protect your margin. And obviously having exposure to a positive way to the Australian dollar's declining value against the US dollar is useful for an Australian production. But the fact remains that what we're focused on is building a margin, operating margin, so that we sell gold a lot cheaper we produce gold a lot cheaper than we sell it on a sustainable and ongoing basis.
Okay, thank you very much for the interview.
No, thanks very much for your interest.